Mananas Zeus, good morning, half a day, and welcome to the Guam Legislature, 38th Guam Legislature of the People's House. The Special Economic Service conducted by the Office of Finance and Budget is called to order. Thank you, and before we begin today's agenda, I would like to take a few moments to put this meeting into context. Over the past year, the legislature has heard clearly and consistently from our community about the rising cost of living. Families are feeling a strain on higher prices at the grocery store, increased utility costs, housing challenges, and the everyday expenses that affect working men and women throughout our island. As policymakers, we have a responsibility to listen and respond. This is why the legislature took action to reduce the business privilege tax by 0.5% in fiscal year 2026. More importantly, pursuant to law enacted by this body, we anticipate an additional 0.5% reduction at the start of fiscal year 2027, restoring Guam's business privilege tax to 4% in close to 9 years. That did not happen by accident. It required disciplined budgeting, responsible fiscal management, and good stewardship of the people's money. It required this committee and the legislature to make difficult decisions, prioritize spending, and ensure that government lived within its means while continuing to provide essential services. At the same time, we are embarking on another important reform. This upcoming fiscal year marks the beginning of Guam's transition to performance-based budgeting. Fiscal year 2027 will serve as the foundation building year focused on agency training, establishing performance metrics, and developing the systems necessary to measure results. By fiscal year 2028, we anticipate a full government-wide implementation that ties funding decisions not only to agency needs, but also to measurable outcomes and performance. For too long, government budgeting has focused primarily on inputs, how much money an agency receives. Going forward, we must also focus on outcomes, what taxpayers receive in return for that investment. The people of Guam deserve a government that is not only funded, but effective, not only staffed, but productive, not only operational, but accountable. We must continue making government more efficient, more effective, and more responsive to the people we serve. The legislature has invested in our local businesses. We have invested in tourism. We have invested in public safety, education, healthcare, infrastructure, and economic development. We have worked to create the conditions necessary for growth while maintaining fiscal discipline. Today's meeting is an opportunity to evaluate those investments. To our executive agencies, respectfully, today's meeting is basically akin to a parent-teachers conference. We are here to examine what is working, identify what is not, celebrate success, understand challenges, and take corrective action where needed. Our goal is not to point fingers. Our goal is continuous improvement. The purpose of this Special Economic Service meeting is to put everything on the table, to review numbers, evaluate performance, examine trends, ensure that we are prepared for fiscal year 2027. We are making decisions based on facts, data, and results. Because at the end of the day, every dollar we spend belongs to the people of Guam, and every agency represented here today has a responsibility to demonstrate that those dollars are being used wisely. With that, I thank all the agency leaders, stakeholders, and colleagues for participating in today's discussion, and I look forward to a productive, informative meeting. The Committee on Finance and Government Operations now convenes this Special Economic Service meeting. The first notice of this meeting was disseminated on June 3rd, 2026, with its second notice disseminated on June 5th, 2026. These notices were made available through local media outlets, the Guam Legislature's website, and our legislative calendar, and the Guam's public notice portal. For the record, today is Wednesday, June 10, 2026, and the time now is 0911. I hereby call this Special Economic Service meeting to order, and now roll call will be conducted. Ari.
Thank you, Mr. Chair. Guam Legislature's Committee on Finance and Government Operations, Chairman Senator Christopher Duenas. Office of Finance and Budget, Director Stephen J. Guerrero. Office of Public Accountability, Public Auditor Benjamin Cruz. Bureau of Budget Management and Research, Director Lester Carlson. Department of Revenue and Taxation, Director Marie Lizama and Abigail Officiar. Sorry. Oh, sorry. Department of Administration, Director Edward Byrne. Guam Economic Development Authority, Mr. Diego Mendiola and Mr. John San Nicolas. Department of Labor, Chief Economist Gary Hiles. Bureau of Statistics and Plans, Deputy Director Matthew Santos. Guam Visitors Bureau, General Manager Regine Bisco Lee. Special guest, University of Guam, Dr. Roseanne Jones. Please note she will not be in attendance today due to an unexpected matter as PPA, but will be providing written testimony by request of the committee and OFB. Guam Economic Development Authority, Mr. Diego Mendiola? Oh, John San Nicolas. Thank you. Mr. Chairman, we have reached a quorum.
Si Masi to the OFB staff, Ari, appreciate your work. I'd like to now recognize my colleagues who have joined us today. The Vice Speaker of the 38th Guam Legislature, as well as the Vice Chair of this committee, Vice Speaker Tony Yata. Thank you, sir, for being here. Also, Senator Sean Gumatauto, thank you, sir. And Senator Tello Taidagui, thank you for being here with us today. Before proceeding, I would like to remind everyone in attendance of the legislature in Guam's general rules of conduct. Individuals testifying shall first be recognized by the chairperson before speaking and shall state their full name and title for the record. Questions and testimony shall be confined to the substance and nature of today's agenda. Personal inferences as to the character or motives of any senator, witness, or participant is not permitted. Pursuant to the standing rules of the 38th Guam Legislature, the chair may order the removal of any person who fails to observe proper decorum. Any violation of these rules may result in immediate removal from the hearing room. Before we proceed further, I'd like to make one request of my colleagues. For the sake of time and out of respect for our presenters, I kindly ask that we hold all questions and comments until the conclusion of the presentations. Open discussion will happen at that time. This will allow us to move effectively through the agenda while ensuring everyone has an opportunity to participate in meaningful discussion later in the meeting. Sijus Masi for your attention to this matter. So moving now to the agenda, after roll call is up first, the fiscal year 2026 revenue tracking, and those presenting on this will be BBMR, Department of Administration, and Department of Revenue and Taxation. The items listed to be reported on are A, April Consolidated Revenue and Expenditure Report, April Special Revenues Tracking Report, Shortfalls and Projected Revenues for remaining fiscal year 2026. I will first defer to Mr. Lester Carlson, the Director of BBMR.
Thank you, Senator, and good morning, everybody. Good morning, Guam.
Thank you.
So, as everybody is aware, the governor, due to Typhoon Sinlaku, pushed back the tax filing deadline from April 15th to May 15th. So, the May CRER, or April CRER rather, that was published showed a total gross revenue that is tracking ahead of the adopted level by $21 million. And then, as been customary for the last 3 or 4 years, in this CRER, we net out special revenue fund shortfalls. So we netted out the amount that was appropriated to the Guam Legislature for IT improvements, the Guam Highway Fund shortfall of $1.1 million, the Property tax shortfall, again, there was a decision by the governor to push back the payment of property taxes to the end of this calendar year, give people a break. Again, it's associated with a couple items, primarily the issue that we had in providing all the property owners with an invoice for which property tax payments could be made. Unfortunately, you couldn't just walk up to the treasurer of Guam and make a payment without the invoice. So we have subsequently addressed that issue, and payments for property taxes are ongoing. And we do expect that to be a self-rectifying matter. To further emphasize that point, I will have this distributed to the committee, but I had my staff take a look at real property tax collections for FY23, 24, and 25, the adopted level versus the collected level. And for example, in FY23, the adopted level for property taxes was 35.7 million. We collected 35.6, a very nominal variance of 0.31%. In FY24, the adopted level was 35.8 million. We collected 35.7 million, a very nominal variance, negative 0.28%. In FY25, the adopted level was 35.8 million. We collected 36.3. So we actually had a positive variance of 1.3%. So currently, in FY26, the adopted level is 35.8 million. And to date, we've collected about 11.8 million, and the variance is about $24 million. But historically, the people of Guam have been very diligent in making good on their property tax payments. And I know that there's an extension, but I believe that this will be self-rectifying. You cannot pay your following year's property tax unless you pay the current year. So if somebody was to go up to Rev and Tax and try to pay next year their FY20 or their calendar year 26 payment, they're not going to be able to do that unless they make good on the 25. So we will catch up. I'm not very concerned about that. Just as an example, it's really akin to what happened with the income tax deferral from April 15th to May 15th. And I was asked to be able to provide the proverbial back of the napkin collections for the month of May that will be published June 20th. And I'm very happy to say that for the tax categories, individual, corporate, and withholding, we actually received $47 million more than what it was that we expected in the month of May. That's primarily due almost exclusively to the tax deadline being moved and people filing. So where we were at $21.9 million gross before we started netting out special revenue fund shortfalls in the April report, culminating with a negative $6.7 million revenue snapshot, that has turned itself around by 180 degrees. Our gross now is 62.2 million. We still netted out the same amount from the April special revenue fund shortfall, the funding for the legislature, the Guam Highway Fund shortfall, the shortfall in the property taxes, the Healthy Future Fund shortfall, and the shortfall in the Tourist Attraction Fund. So that amount of $27.7 million remains. We haven't made that adjustment yet. But when you take the $62 million gross general fund revenue collected, and that we do not anticipate very much variation from today until we publish the report on June 20th as mandated. If there are any variations, it might be a late positive posting as opposed to something that's that would take that number down. So I actually had my staff do this exercise midweek last week and then update it on Friday, and the variance was about $100 and some thousand positive. So I'm very comfortable publicly presenting this back of the napkin estimate as a prelude to the beginning of this SES, because I do believe, as we've done with conservative budgeting adopted by the body and put into place either through concurrence with the governor or legislative action to override, we have as a group provided operational funding for the government of Guam, yet on a consistent basis we have collected more money primarily in the tax categories, withholding tax, corporate tax, and individual tax, than anticipated year after year after year. So everybody got a copy of this, right? Okay, thank you. So when you take the $62 million and you net out the 27, we're at $33.5 million after taking into account special revenue fund shortfalls and the most recent and much needed IT improvements for the Guam legislature. Next week, Senator Gumatauto is going to be holding a hearing on Typhoon Sinlaku. I mentioned to him at the beginning of this meeting that we're going to provide a expenditure or report for that meeting. Unfortunately, Mr. Byrne and I won't be here, but we have $9.9 million of the funds that were appropriated for the Typhoon Sinlaku response held in reserve. So we believe that there's been a very significant tapering off of expenditures attributed to typhoon response, as I think everybody can see. So it is not, I'm pretty comfortable with saying that you're probably going to get back $10 million to either put back into the rainy day fund, because that's where the primary amount was taken. So it'll be, I believe the law actually says that, but we're pretty much done with expenditures. There's been not that much movement, and the report will be provided to the committee next week to verify that. So all in all, the legislature was proactive, and I thank you for that. We sat before you asking for the $25 million appropriation. We had three sources of money. One was the $250,000 for the emergency declaration by the governor, and the legislature came up with fund sources from residual funding that was provided early in the fiscal year for the SNAP's benefit cessation that the body stepped up and funded. So there was money left over that was appropriated, and then also money taken from the rainy day fund. So what we've been doing collectively, working together, has resulted in funds that were made available to address a natural disaster. But at the end of the day, we're going to be able to have funds returned for reuse, other uses as the body sees fit. And I think that the public should be very much aware of how the actions and the interactions between the legislature and the executive branch has been extremely beneficial. And the concerns raised by the chairman early in his remarks, I would be remiss if I didn't remind the public that as a practice that is embraced by everybody, we continue to suspend the gas tax. So the price of gas would be 19 cents a gallon higher if we did not continue to suspend the gas tax. So we are collectively providing assistance where we can to everybody in ways that we believe will be most beneficial, immediate expenditures, expenditures that are incurred repeatedly. Everybody needs gas. This body went ahead and continued that practice in FY26. We, in the executive budget, continue to offset that and not apply that tax. So the public, I think, is the beneficiary of some very good stewardship, some very good moves with the public funds that are either being, like in the case of the gas tax, your immediate relief as opposed to deferred relief. And there's got to be a lot of positive things that cumulatively and collaboratively we've done. And I'd like to start this meeting off by saying the anticipated collections in May, particularly for the deferred tax filing, has resulted in putting us back in very good financial standing. So if you take the 62 million and you net out all the shortfalls, we're at 33.5. If you were to go ahead and look at applying that 10 million from Sinlaco to this current year, or if you decided to put it back in the rainy day fund, which I kind of hope you do, again, we will have restored some of our fiscal reserves, which is a very prudent thing to do. So I think that takes care of the item number 3, Mr. Chairman.
Mrs. Masi, does DOA or DRT have any additional comments to the presentation by BBMR? Mr. Byrne, please identify yourself.
Edward Byrne, Director of Administration. Thank you, Mr. Chairman, for inviting a comment. The only comment I would make, Mr. Carlson spoke very eloquently about the general picture that you see before you. I would just support his recommendation that any surplus from the Sinlaco expenditure is restored to the rainy day fund. When we met with investors in May, they were very pleased with our achievements in funding a rainy day fund. They understand there might be calls on that, but they would certainly appreciate any surplus being restored.
Thank you, Mr. Byrne. Ms. Marie, any comments? Okay, before moving on, I want to welcome Senator Calvo for joining us also this morning. Senator Calvo, welcome to the meeting. You're welcome. So next on the agenda going forward is FY 2026 Advanced Tax Credit Amounts Updates. This will include, once again, BBMR, Department of Administration, Department of Revenue and Taxation. And the categories for those listening are going to be A, Earned Income Tax Credit, B, Child Tax Credit, C, Additional Child Tax Credit, and D, Other Advancements or Reimbursements. I will go, I guess, first to Lester Carlson, BBMR.
Thank you, sir. I will defer to Marie Lazama from the Department of Revenue Taxation.
Good morning, Mr. Chair, Senators. Yes, so just really quickly with regard to the FY26 advanced tax credit amounts. For earned income tax credit, on March 2 of this year, we received $52,402,000. With regard to child tax credit, we received $59,967,000 on the same day. The additional child tax credit has been rolled into the child tax credit. And then with regard to other advancements or reimbursements, the one that really just sticks out would be the American Opportunity Tax Credit that actually assists families with regard to college expenses. Oh, I'm sorry.
Okay, Ms. Marie, we are going to go and just ask AV
Okay.
If you can just pause for just a moment.
Sure.
We do have those presentations that you gave us.
Okay.
So maybe those listening and watching in the public can join.
Sure.
AV, can you please bring up the slides from Department of Revenue and Taxation?
Yeah. And I apologize. I had come with printed slides, and I don't know if AV was able to get to it, but.
Okay. So we will get it from, we'll take a 1-minute recess.
Okay.
The Special Economic Service meeting is back in order. So colleagues, you have the slides for Rev and Tax. There was not an attachment in the email or an email, but once again, why don't you just start from the top once again, and then colleagues, you can follow along with the slides.
Sure, will do. Good morning, and I apologize for that, but I do have printed sheets. And so just starting up from the top with regard to the FY 2026 advanced tax credit amounts. With regard to earned income tax credit, we did receive $52,402,000 on March 2 of this year. With regard to child tax credit, we did receive $59,967,000 on the same day. Any additional child tax credit was included in the overall child tax credit amount. And then with regard to any other advancements or reimbursements, one of which, or the one that is more prominent, is the American Opportunity Tax Credit, and that is something that actually helps families with regard to college expenses. So that is being calculated and will be provided. That's really it for item number 4.
Cesar Masi, also, I just received can you just go ahead and let our colleagues know, Lester, what you've just given to me that they're being disseminated to them?
Certainly, Senator. The property tax summary of adopted versus collected numbers from FY 23, 24, 25, and where we are in 26 that I read, I provided a hard copy to the chairman, and I believe he's going to make copies available to his colleagues.
Yeah, we are colleagues, and that historical data is going to be very important because we don't know. I do bump into people, and I'm sure you do from time to time, who said, well, they gave me the holiday, so I'll pay it in December. So we can use this historical data, and if it continues to report on the CRER in that 24 or 20-some million dollar, gap, that historically, here's the information that has been provided, that historically these are our traditional collections while we contemplate the budget. Thank you, Lester. So at this time, we will now go on to the next item, and that is the fiscal year 27 assumptions supporting revenue projections. That will be BBMR, Rev and Tax, DOA, and this will be on individual, corporate, withholding, business privilege tax, Section 30, major special funds. Lester?
Yeah. I'm going to have Dr. Abigail present this section, sir.
Hi, good morning, senators and everyone.
Little
My
bit
name
closer.
is Abigail Ifashar. I'm a budget and management analyst supervisor at BBMR. So historically, when the Bureau prepares the general fund and special revenue fund projection for the EBR, it's predicated on the 3-year average of actual collections from the prior 3 years. So in this case, for 27, that would be 24 25, and 26. And in preparation for the EBR, we had actuals all the way to December, the full first quarter of fiscal year 2026, tracking forward to come up with a 3-year average. From there, we plug in those numbers into our composite model, primarily driven by the 4 major categories, being the individual income tax, corporate, withholding, and BPT. From there, we get the universe, or what we call the universe is basically the total general fund. And using the statistical average weight of the past 3 years, it is then allocated into all the other general fund categories that we generally see in the Budget Act. So for 2027, our gross general fund revenue came up to $1,078,000,000 for 27. For Section 30, would you like to speak on that, sir?
In anticipation of this meeting, I actually had the letter of request to the Department of Interior drafted and signed by the governor, and it's $85,187,739. Traditionally, the Department of Interior Office of Insular Affairs writes us in like July and requests for our Section 30 number. But because we were having the budget session early this year, I thought it would be important to do 2 things. Number one is get the governor to sign the letter and date it June 10th. So when we do get the call from the Office of Insular Affairs, we can send this letter that's already been drafted in support of the FY27 budget.
Once again, what's the variance? I think that's the most important number, really.
The variance is, in 2026, we received 79.7. We are requesting for 85.1, so it's a variance of 5.
Increase of about $5.5 million,
yes.
yeah?
And for the past several years, we have not had any Section 30 reconciliation, so we could possibly be getting more when they finally get caught up with doing the reconciliations.
Okay.
We normally get any reconciliation amounts later. It's not normally part and parcel to what the advance request is. And for the public, the advance request is almost 100% honored because we ask for this in advance.
Right.
And then there's a reconciliation done by the Treasury, and that has resulted more often than not in us getting some subsequent payments for the adjustments that are in our favor. We have long since closed off the war claims payments that were taken from Section 30. We don't have any encumbrances on Section 30, only the Section 30 bonds. So this is a very good number. We can go to the bank on this number. It is honored as an advance request subject to reconciliation.
And then just to continue on to the major special funds, we basically take the same approach, basing it on the actual 3-year average of the actual collections of the past 3 years.
And is there any variance there as well?
I'm sorry?
Is there a variance there?
We could provide you with a variance per fund if you would like, but we don't have that readily available, but we can provide
Okay.
it after the fact.
But we were able to get the Section 30, which is perfect. I just want
Yes, and
I know I'm asking these very short questions. It's just because they're going to probably be looking at gross revenue.
And
for the
then,
questions, so.
sorry, for the 27 revenues, we are standing by what we had presented in the EBR, which was submitted in, I believe, February 2nd. So those same numbers, we are still on track to collect those, given the additional 5 months of collection from January to May.
So any other comments from the other agencies on this particular category? Seeing and hearing none.
Just
Yes.
one, FYI, I know your opening statement made reference to public law that would take the BPT down from 4.5 to 4. For the public's information, just in case they didn't know, we predicated the FY27 executive budget request on maintaining BPT at 4.5%. There are a number of public needs that we are going to have to incur. Namely, once we finally get through the protest on Simon Sanchez, we're going to need $16 million in cash. And the reason why I say that is because if you take a look at the other lease schools that we have, Teason, we have to make that payment in the first quarter of the fiscal year. That's $10 million. JFK, we have to make the payment in the first, I believe, month of October. And the same thing with GEFF for the 4 schools. Those payments are provided to the trustee within the first, collectively 3 months of the fiscal year in cash to be able to pay the lease payments. Again, I'm going to put this out there for everybody's information. At the end of fiscal 27, we're going to own Okadu High School, League One Elementary, Atacao Elementary, and Estumbo Middle School. All 4 of those lease schools need a lot of work. Unfortunately, they were not maintained to the same degree as Teason or JFK. There was a foul ball is the nicest thing I can say about that process. But we're going to need revenues, ladies and gentlemen, to be able to bring those 4 schools that will be under our ownership at the end of fiscal 27. And we're going to need revenues to support that. Even if you took the existing amount that is paid to GEFF for the lease payments of the 4 schools, I would imagine that the repairs to one of the schools would maybe that amount would be just barely sufficient for some of the repairs. We're talking about, you talk to any of the 4 principals, they'll give you an idea of how dire those schools are. It's an unfortunate situation. This did not work out the way we wanted it to work out, and nobody came to this body to ask for additional appropriations so that prior to the turnover of the facilities to GovGuam ownership, they could be returned in better condition. Nobody's approached this body, nobody's approached us. So it is what it is, unfortunately, but there are a number of needs. The hospital is always going to be an issue. Road repair, because we're providing the relief to the citizens via the suspension of the liquid fuel tax on gas. So that was the thinking behind what the submission was. I know that the body, there's a law, there's probably some momentum towards moving it to 4%. I'm just FYIing everybody that the reason why we kept it at 4.5 is because we do see funding requirements that could utilize the 0.5%. Thank you.
Thank you. Yeah, that'll be a policy call, but thank you for the information. Yeah. Okay, so does that complete that presentation? Okay, going to the next then. This is going to be the FY 2027 estimated tax credit advancements or reimbursements. And this is BBMR, DRT, and DOA. Who will be presenting?
Actually, I'll be presenting on behalf of the group.
Thank you. Did you provide, we don't have any slides for this.
Yeah, that's the same, I'm sorry.
Okay,
sir.
no problem.
Yeah. Okay, so basically for the last several years, the Earned Income Tax Credit and the Child Tax Credit funding has come in the form of advancements. And they've been transmitted from the U.S. Treasury via EFT and typically in the first quarter of the calendar year. And we expect the same for FY 2027. So just to show a little bit of a comparison, the amounts that we received for previous tax years, for 2024 child tax credit, we received $53,840,000. For the earned income tax credit, it was $45,218,000. With regard to tax year 2025, CTC was at $59,967,000, and EITC was $52,402,000. So that is what we believe, or we anticipate for the tax year of 2026 going into fiscal year 2027. So, would you like for me, sir, to just go on right into tax refunds? Because that was it really for item number 6.
Yes, if
Okay.
that's solely your
Okay.
presentation, yeah, let's keep moving.
Correct. And then you should have in front of you a
So
copy.
just
Sorry.
for the public listening, because this is this
Yeah.
is the one that they might be listening for.
Sure.
So this category, tax refunds and collections, Department of Revenue and Taxation,
Yes,
status on outstanding tax refund payments and
Correct.
the use tax.
correct.
Please proceed.
Yes. So you should have in front of you the refund report, the monthly income tax refund status report. It's slightly delayed, but it is as of April, actually delayed meaning in its transmission to the speaker. But it is current and is as of April of this year. So I'm just going to quickly pull out some highlighted or some numbers. The total tax returns filed thus far this year for tax year 2025 is 36,692 returns. Out of those, 35,578 are refunds, and the remainder of 1,284 is for returns wherein there are liabilities. So in other words, what we're expecting people to pay. And it should be noted that the number is, if you're going to compare it to the previous year, of course, reflects the fact that there were some delays in actually processing returns, one of which was the temporary system suspension, and then, of course, Typhoon Sinlaku and the resulting deadline being moved to May 15. With that said, right now, where we were typically between probably 6 to 8 weeks, certainly even as early as 4 weeks, processing or getting returns or refunds out from the date of filing, we are now at about 13 to 14 weeks. With that said, we do have teams working overtime to be able to bring that processing time down back to its original average of 6 to 8 weeks. And we're certainly still ahead of the court-ordered injunction that says refunds must be paid out by the tax filing deadline. And in this case, that, that would be May 15. So part of the reason, in addition to the fact that we know that people want their money, part of the reason why we have been trying our best to keep to a shorter processing period is the amount of interest that we end up paying. So, nobody really kind of thinks about this, but when you do pay it out faster, of course, then the interest that we pay out associated with those refunds, it's lower. So we are, our team is trying hard to address certainly the delay, and we can assure this body that, efforts are being made to do so. With regard to, let's see here, go down to, so the total number associated with the returns that were filed and refunds and then the refunds that were paid is currently at $59.84 million. With regard to corporate returns, a total of 678 corporate returns have been filed thus far. We have, out of those, 227 returns wherein the government is owed money, and then the remainder are actually refunds for these corporate returns. And I'm going to move on, sir, if it's okay with you, to use tax. That's my presentation for for the status on the tax refund payments. With regard to use tax, DRT is one of 3 agencies that has been identified to participate in the performance-based budgeting concept or program. And along with that, of course, we've set some key performance indicators. And out of the performance-based areas, that we have been asked to actually concentrate on is use tax. I mentioned to the body during our budget hearing that with regard to use tax, there are 2 areas of which to be mindful. Number 1, if it comes in through the port, then customs collects the tax before any shipment is released. When it comes to the airport, there are 2 things. If it is an actual consumer, customs collects the tax and then the shipment is released. However, the second part to that, if it were to involve a third party, let's say FedEx, UPS, etc., there was an AG's opinion issued back in 2011 that said customs was not going to be able to withhold the shipment, but rather turn the shipment over to the third party. And then the third party would have documentation that would be given to the consumer and then forward it, a copy forwarded to us so that we can go ahead and assess and actually collect from that person. We know that that process, as indicated in a previous OPA audit, we know that that process needed or needs to be improved upon. We have since met with customs over the last couple of years. We've tried to implement certain things, and while there are still improvements to be made, we have made some progress. Customs has informed me that the amount of time that it takes for those documents to get over to DOA have been reduced. However, it is something that we need to ensure that our staff is aware of and continues to be able to monitor that and be able to effectively collect the tax from that particular area. And so we do have, we continue to meet with them, we continue to reach out with customs. We're certainly encouraged by the fact that they are getting a system that perhaps we can go ahead and be part of. Customs certainly has indicated that they would like DRT to be part of the steering committee for that particular project. And with that said, sir, that is my presentation on use tax.
Sidusmasi Marila Zama from Revenue Tax. So the next item is federal assistance funds availability, and this is a whole bunch of folks. So I'm just going to open up for DRT and then see if anyone else has something to contribute. But we got DRT, DOA, BBMR, DOL, GEDA, GVB, GSC.
Okay. So, with regard to DRT, sir, we have no outstanding ARP funds, and we certainly don't have anything with regard to FEMA reimbursements.
Okay, DOA.
Mr. Carlson will address the main part about the ARP funds. As far as FEMA reimbursements are concerned, we continue to receive claims made on FEMA, and we continue to receive reimbursements for both public sector and private sector claims. As you know, we have to upfront 10% of the claim. So for private sector, the claiming entity, which is usually lately a school, pays the whole bill, and we reimburse, when we get the reimbursement from FEMA, 90%. For the public sector, the government pays for the bill because FEMA won't reimburse us until we actually incur the cost. And then we reclaim the amount for FEMA and it goes back into the account that the total amount expenditure came from. There's been no hold-up on the regular FEMA claims.
Okay, so Lester, on DOA's ARP.
Well, how about ARP in general?
Okay.
Yeah, so the report that we provide to you every 5th of the month, we are really trying to make sure that we don't return a penny to the federal government. We're cleaning up some negative balances that are in that report. We're trying to spend down the funds that were allocated to the new hospital. Fortunately, the U.S. Treasury provided guidance via a reclassification guide in April of this year that would allow for funds to be infused into existing projects that, for example, the work that's being done by DPW for village street paving. They had a contract with Hawaiian Rock that precedes December 31st of 2024. So Director Arreola was very confident that his folks, in collaboration with Hawaiian Rock, could use additional funds to be able to do more village street paving. That's ordinarily funded by the liquid fuel tax that we suspended. So we thought that was a great use of funds to be able to benefit villagers, in a most direct fashion. So anything that has the eligibility that, like a contract that was in place before December 31st of 2024, we're looking at very closely. You'll also note on the report there's a Sinohania fire station that broke ground. We've asked the contractor to submit a bid adjustment to be able to complete that project in its entirety before December of this year. And he's obliged, thankfully. So we will see a new fire station up in Sinohania before the end of this fiscal year. There's a lot of things that we're trying to do, and the reclassification guide has been very helpful. It's very apparent, Mr. Byrne and I are really of the opinion that the folks at Treasury don't want us to return any money. They don't want anybody who received this money to return the money. They'd like to see it spent in the jurisdictions that were provided the funding. So we're working very diligently to try to expend, not just encumber, because we have to expend it before the end of this calendar year. And we're making some strides, and we'll keep you updated on how we're doing. I just think that the application of the funds for village street paving is a win-win for everybody. It takes some of the burden off of your budgeting requirements, knowing that there is going to be additional work done where the funding is being offset. And I think that's, nobody should have anything but like sighs of relief and attaboys for that initiative. So we are, it's a work in progress. We're diligently trying to find eligible projects that can be done, because we don't want to be in a situation where we allocated money and all of a sudden, like, we've got the big letdown at the end. So Mr. Byrne and I are being very super cautious about what it is that we advise the governor to allocate these monies to. But in the end, we don't want to return a penny.
Okay, so just for those that are listening to, we're talking about the American Rescue Plan funds.
Yes.
And the current effort to reallocate those funds from the $104 million balance. And the update so far is you had a first reduction of 104 down to about 84. That was the first 20 million. Then another 20 million after. It looks like 64 is the current balance. Okay, it's been brought to my attention that there are some categories showing negative. Can you speak to that? Is that a movement of the resources, or is it an over expenditure in that category?
It has a lot to do with our conversion from the new, into the new system from the old system and carryovers. And what we're doing is we're slowly but surely, one of my staff has been working on this for the last 3 or 4 months to take those negative balances. Some of them are in like personnel, and we don't have, there's only one person that's getting paid out of ARP. Everybody else migrated to either general or special funds. So any balances in personnel, for example, we're going to be using available balances in other categories. And if you look at the report that we just submitted versus something about 4 months ago, you'll see a very vast improvement on, there's a lot of balances that are zero as they should be. The negative balances will be taken care of in the coming months as we clean up the report and get ready for actually closure. So that's a work in progress, sir.
Okay. So I'm going to consider that for efficiency, then the report on that for DRT, DOA, BBMR, DOL, GEDA, GVB, GSC, unless there's anyone who wants to comment on that that's been recognized. Okay? So that, now, Mr. Byrne, I'm going to accept then that your presentation of the Federal Emergency Management Agency reimbursements, is that inclusive of all identified entities for this category? So you're managing the entire program?
Yes, any federal FEMA reimbursements come through DOA.
Okay.
And then get dispersed as necessary.
So you would be, you're managing that, and you'll provide ongoing and final reports?
Yes, sir.
Okay, thank you. So that concludes this part, this section of the SES meeting. So going to the next, the Government of Guam audit, the Office of Public Accountability and Department of Administration. I'll first recognize our speaker in order to be able to make this presentation. Speaker Cruz, you're recognized.
Thank you very much, Mr. Chairman. Benjamin Cruz for the Office of Public Accountability. I'm very happy to say that the GovGuam 24 you finally received it in late April. And you'll notice from our one sheet on the report, we've issued to date 11 audits. 5 of those were the charter schools. 1 was solid waste, which didn't need the OPEB. Power Authority, Housing, Waterworks, Economic Development and Visitors Bureau needed the OPEB number, and the OPEB number wasn't ready until 3 weeks ago. And as soon as it was released in late April, we started with the release of all the rest of the component units that were in need of the OPEB number so that they could complete their 25. You'll see that we should be releasing community college sometime later on today. We received the final copies, final version last night, about 7 o'clock. And so we should be issuing it sometime today. We have a number of other audits on the chart there that are going to be released in the coming days, in June and July. You'll notice that the Department of Education will hopefully be released by the end of September. And we had the entrance conference for the GovGuam-wide audit the other day, and it looks like we may be able to release that by the end of November of this year. And we can start in December the 26th, we might be able to catch up by next year release. This report only has 24 and 25. You'll notice that there's only 13 audits on here. We have other audits that aren't completed. Aren't even on this list. We have one charter school that is in 23. And we have some government agencies which are really small agencies like DCA, Chamorro Land Trust, GALC, and I believe one other agency that escapes me right now. But Mr. Chairman, Mr. Burns and I have been talking. Some of these small agencies either need to not be authorized to keep non-appropriated funds so they don't need to be audited. Or if they are, then they need to have them under one of two things. Either they must dedicate some of their money to hiring a real accountant to put together their financial statement, because the auditors cannot and should not write the financial statement for them. We have 3 of those agencies, DCA, Chamorro Land Trust, and GALC, Guam Ancestral Lands. They don't have anybody. They have administrative assistants, administrative officers, and some even have an ASO. But I'm not sure how they're hired for those positions without any accounting background, because they can't keep books and they don't know how to use QuickBooks. And for the small agencies that are insignificant, that would not be a problem. But we've had a problem for the last several years because Guam Ancestral Lands has a huge savings because of the amount of money that they've been receiving for their leases and the payments from RCA. And that amount is considered by the auditors as being material and is necessary for the completion of the GovGuam audit. The past several years, fortunately, EY has been doing both. Has been responsible for the audit of GALC and GovGuam, so they were able to use an Excel spreadsheet with the numbers that GALC gave them to be able to complete the GovGuam audit. But they need to have an accountant, either hired full-time or like PBS. They hire the accountant just to do their books, and they contract it out, and it's done, and it can be audited. They can prepare the financial statement and get that audited. But something has to be done, either consolidate those back under some other agency, into DOA, because the component units are necessary to complete the GovGuam audit. And if GALC is not completed, it'll hold up the issuance of the GovGuam audit. So I'm going to go to the board meeting on Friday and tell the board that they have to contract out, find some money to contract out for a accountant to do the books, or they're going to have to hire someone through the GovGuam system to do their books, because we cannot keep, their books haven't been audited since 22 or 23. And so on the blind agencies, it's going to have to be the legislature that appropriates money to them to do for their accounting, or to either make sure that their ASO has accounting background and can and is able to use QuickBooks, or they just have to contract out for an accountant, because we cannot continue to be behind 3 fiscal years with some of the agencies because they don't have an accountant and they have NAF funds and they can't account for it or don't know how to account for it. Okay.
So I'll go to DOA, and for my colleagues, I know that Speaker Cruz, our OPA, has a previous engagement that he has to get to. So for this particular presentation, we will have questions from the panel so that I can release him after we move on from here. Just real quick, though, to the Speaker Cruz. So of which you speak, those entities, but the governor still has control via appointment authority to work with them or to have them meet deadlines or not? On the...
We've tried, and they've asked for assistance, but they're not getting assistance. I told them, go to OTEC and try to get them to teach you how to use QuickBooks. Get a temporary designation or assignment of an accountant from some other department to come in and help you write your books. But they're really small agencies, and nobody looks at them.
Okay.
The only one that looks at them is me, because I'm constantly hammering them. But really, seriously, Mr. Chairman, GALC needs to have either a real accountant on staff, probably not, but I mean, just at least a contracted. Maybe they don't need to get all the benefits and stuff, but just contract out for them, or have some money in the appropriations upcoming that they can use to hire, because it's imperative. Otherwise, give them back to DOA, because they shouldn't be out there by themselves with money.
Okay, thank you very much. And with that, I will go to DOA. And just a reminder, we are on the discussion on the FY 2024 audit, as well as updates on the FY 2025 audit, and any comments that the OPA may have made. Mr. Byrne, you're recognized.
Thank you, Mr. Chairman. And just to continue on the theme that the public auditor was on, GALC was a problem in finalizing the fiscal 24 audit. And in that particular case, we did have considerable difficulty getting some information out of them. Just to clarify, we do include numbers from all these agencies within the overall audit, but generally they're not material to the overall audit, and therefore generally don't come under audit scrutiny. But they, because they're part of the government, they have to be included nonetheless. The public auditor raised the question of non-appropriated funds, and that too is an issue. It's an issue which I've raised recently with the auditors as to which units do need to include their non-appropriated funds in the audit. There are non-appropriated funds basically all over the place. For instance, you know, the mayors have non-appropriated funds, which they report to the legislature, but they don't report to us. So we don't have a continuous accounting of those funds. It's a matter I've raised with the auditors as to the effect on the audit, and of course we'll be happy to update you when I get a response from them, which I hope will be in the next few days. A big part of the general audit is GDOE. It's part of the general fund. It's roughly 20% of the general fund. And without their numbers being reported timely, it's really hard to conclude the government-wide annual audit. We have asked them, and we did receive their preliminary trial balance this year, and we are including it in the numbers that we're currently putting together to determine the status of the general fund, which we are working on now. But we're not regularly updated with changes to that trial balance. So we will be, obviously, we're not going to ignore the issue. We're going to speak to DOE about these updates. But the issue last year was a considerable difference between what they thought they were going to receive from the federal government and what the auditors thought initially they were going to receive. And that was the biggest cause of the delay, and it seems to be an issue that might recur this year. And the result of that affects the surplus or deficit on the general fund, which is why I devote so much time and attention to it. We did finish the fiscal 24 audit. We had to take some decisions to short-circuit further inquiries or responses to inquiries in order to get it out. That's the decision we took in order to get the audit issued, as a number of people, investors, trustees, bond trustees, were anxious to receive the numbers. As we start the fiscal 25 audit, which we've already started, and we've already provided to the auditors our trial balance, so they started work on fiscal 25 already. Absent these other units that report, and the other units that we depend upon getting numbers from are indeed the legislature and the judiciary. Those are the two biggest ones that form part of the general fund. We're trying to make sure, in order to, as the public auditor correctly says, it's our job to present the financial statements, but we can't do that without the numbers and without a routine for reporting the numbers to DOA. In the past, these numbers were effectively reported to the auditors and not to us. So we're engaged in trying to right the whole situation in order to comply with the current accounting rules, which say the auditors audit and we're supposed to accumulate and present the financial statements. We, at the audit entrance meeting, which the public auditor referred to, we did all agree that it was going to be our goal to complete this audit by the end of November. We're all working very hard to do that. It's no secret that there were more issues, individual issues, with the compliance side of the audit than there were with the financial side of the audit. And we're working to try and mitigate some of those issues. At the conclusion of the fiscal 24 audit, we met with the auditors to try and determine and isolate what were the real key issues. And Guam had a large, because of the expenditure of federal funds, Guam had a large number of major programs. And that obviously caused a lot of work. The auditors have assured us that for fiscal 25, they've engaged more people on the audit in order to have more people, because there were actually over 12 major grants that had to be investigated, some of which are fairly complicated. They've assured us that they've engaged more people to undertake that, and we're looking forward to a smoother and more productive audit for fiscal 25. The staff of all the agencies that are involved with this, have been basically involved in completing audits for the last 2.5 years. That is in addition to their regular duties. So we're hoping, like the public auditor says, we catch up so that we can have periods in between where we're not constantly dealing with audits.
Yeah, so That's good news, and the committee also is scheduling meetings with the auditor, the audits to EY, to be able to also get some details as well. Speaker Cruz, do you have some comments?
Yes, an additional comment, and I'm sorry that no one's here from the university, but I have spoken to the vice president of the university. Because of the importance of the compliance report, and because of the fact that GovGuam receives millions, if not billions of dollars in federal funds, I've tried to explain to the university that training their bachelors of public administration and their masters of public administration should include training on operating and managing, applying for, operating, managing federal grants. If not, I don't know what public administration is doing there, because that is a major portion. And they also should include in their curriculum procurement, because it is such a huge part of the expenditures of public administrators, and the fact that they need to know these things. I'm hoping they'll include it in their curriculum. They've said they're going to include it in some adjunct group, that the global something or other, they have a side thing at the university that's going to, and I'm trying to convince them that it should be part of the curriculum of those in the public administration, and both for the masters and the public and the bachelors. I'm glad that at one point there was a professor at the, or adjunct professor at the University of Shirag, who had procurement as the class that he taught, or at least that was the major issue in his class for the year. But it's imperative that when you come out of public administration, you know that, you have that background so that you can handle procurement, so that you can handle and manage federal programs. Otherwise, you're just a paper pusher that's worthless, because I don't know what requirement they need for these program managers. If they don't know how to use federal programs, they're worthless. Excuse me, but you know, it's a nice position to name people to, but unless they really know how to do that, they really aren't going to be able to much assistance to the department. So the programs they're supposed to be running, which are federal programs, they don't know how to, because they have not read the compliance reports. They don't know what the OMB rulings are and how to be able to follow up on them. And so I'm really hoping the university will include it.
And Mr. Chairman, I would certainly endorse that. We've also spoken to the university about the accountants that they train. There's a very small part of the accountants training that's actually public accounting. So we have spoken to them about increasing that too, so that we get accountants who have a much deeper amount of training in public accounting.
Yeah, actually, you'll be happy to know that we've engaged Dr. Ricky Hernandez, on the performance-based budgeting to also provide a curriculum for training on that. So I'm sure this will be easy to add to the list, and maybe Dr. Abigail will get involved in that from BBMR, because as we quickly remind ourselves of how that law was implemented, it's actually a conjunction between BBMR, who was very helpful, and also OFB on performance-based budgeting. So I think I'll have my staff add that to the list, that this should be compulsory for public administration in terms of federal grants management. So.
And one more point, Mr. Chairman, in the upcoming budget, please provide for the accountants in GDOE and DOA and all the other agencies. these agencies need people that know what they're doing and will stay if they do, but they need to be compensated. And there needs to be parity with the autonomous agencies because they're pirating everybody. And we need to get them back into the line agencies to assist us. But in order to be able to do that, they need to be adequately compensated. So please, they handle billions of dollars. They need to be adequately compensated.
We'll work with all them to see if they've done the procedures necessary internally to make either above-step recruitments or some global proposal on that particular area of accounting. So certainly, I think what happens, Mr. Speaker, is as you've worn this hat before as well, once you start doing ... what happens is, you know, it kind of, what about us, right? So I would like a universal approach, and we'll work with the pertinent fiscal entities for that as well. But point well taken. Like I said, the public auditor has to attend a previously scheduled engagement. So I'm not going to go in order. I'm just going to ask anyone of the senators. I'll start with Senator Tydegui. Any questions for the public auditor, as well as it might interface also with Department Administration?
Thank you, Mr. Chair. Good morning to everyone. Are you auditing the military contracts at all to find out, doing any kind of audit to assist us? I know that there was a report here done, but are you also being active in finding out what taxes are we receiving from the military buildup contracts?
Since the last audit report that we issued 4 years ago, we've not, but it could be a topic of the next one.
Okay, thank you so much. I appreciate that. Also, are you also auditing any debt or obligations that are outstanding in the government of Guam as well?
It's included in the Gov Guam report, the number, and the legislature's been really good about it, in that it's the first thing that's appropriated for, so there really is no problem with it. I am more fiscally conservative than lots of others. And sometimes I'm not sure whether or not it's such a good idea to refinance some of the bonds to make it may be a nice savings now, but it means additional payments in the long run. But that's a policy decision. The legislature approves it. They want it. You grant it. I'm just saying, from my perspective, that's.
So in other words, the government of Guam holds quite a bit of debt and obligations, basically bills that were mandated by agencies to do certain things, and so that has been measured as far as the how much we owe still. And okay, so basically you're saying it's in the audit. So can you tell us?
Because of the fact that you guys demand that it be appropriated up front,
Right.
it's not a problem. And because the component units like GWA and GPA, if you look at their audit, it talks about the fact that they have to keep in reserve a certain amount to make sure that they can make their payment. I don't think we've been delinquent in any of them. We've been lucky, so it hasn't been anything that I've had to look at.
Okay. So other than that, there is one other question, last one. You mentioned earlier about the obligation. Okay. Oh, God, I lost my train of thought on that one. Oh, I can always go back. But so far, that's all I have with regards to this. Appreciate the work you do at OPA's office, and I'm glad you plugged it in about making sure that agencies have accountants and people who oversee procurement, because it does make a huge difference, especially in your office that you deal with. But you know, I'm finding out that these procurement classes actually are not taught by individuals who actually know procurement. It's very disheartening, and we're hoping to clean that up. Thank you.
Ms. Masi, any other senators for the OPA? Senator Gumatalto, you recognize.
Yes, thank you, Mr. Chair. And I only have one question. I am going to ask the administration in a couple of minutes about the appropriation reserve report that they do publish to all of us. But I just had one question: does GovGuam's appropriations reserve, as currently structured and sized, function as a meaningful fiscal discipline tool for the executive branch? I'm just going to tap your OPA hat as well as your former speaker hat, and the comment that you made earlier that you're fiscally conservative.
It seems to have worked. I mean, it is working currently. I've not seen that there's a problem.
Okay, that's all that's my only question. Thank you, Mr. OPA. Thank you, Mr. Chair.
Ms. Masi, any other senator? Seeing and hearing none.
Oh, wait, I do remember what it was. Now, Mr. Chair, I apologize to jump in, but the retirement, the obligation for retirement that we are responsible for, do you incorporate that as well into the audit report? And what is that number to date?
It is in the audit, and it should be coming out. I thought I had a retirement fund. It's the 857 report. It should be, oh, there, GovGuam Retirement Fund. It was, we had a draft, but the release is coming. It needed the OPEB number to complete it, to know what the percentage is going to be for next year. And that's a number that you guys have to deal with in your budget.
Okay, and then we're talking about, you know, prior obligations, you know, that we still have the subsidies and the annuities that we have to. And it's still quite high, though, right?
It's quite high, but that's why the percentage has gone from when I was chair of 26% to now it's reading at 31%, something like that. But the thing is that we made a decision back then that by 2031, or I think you guys have pushed it back to 32 or 33, 34. Or 34 now, that you guys have said that obligation will be paid down. That's why you're making such a huge, those huge payments in up front now to cover the reserve. But that's imperative because otherwise it'll go the way of the Social Security, which this morning in the news said that it was going to be, the trust fund was going to run out in 7 years. And thankfully ours should be, if everybody stays with that 34 date and follows the plan that was conceived a few years back, it should be, the unobligated, the balance should be covered.
Okay, thank you. Mr. Byrne.
Yes, if I could just add, and it is a big number. It's included in the government-wide audit too, and it's about 1.8 billion, I think it was, of fiscal 24. But what a reason...
It's 1.8 billion, correct?
1.8 billion, yeah. What the principal reason for the increase that you've seen recently in the contribution rate was that investment losses incurred during the COVID period are amortized over a I think it's a 5.5 year period. So we're amortizing some of the losses, but not yet recognizing the subsequent gains that were made after the COVID recovery. So you should start to see that improve over the next few years.
Seeing and hearing no other questions, Speaker Cruz, OPA, please have a great day. Enjoy the rest of your day. Okay, and so that should conclude that section of our agenda. Moving on now, we are moving to Debt Service Management FY 2027. And for that, we recognize Guam Economic Development Authority, and their report is on plans for refinancing and restructuring for debt services, and also new and proposed financing. Sir, please identify yourself for the record.
Johnson Nicholas GEDA. Good morning, Mr. Chair and members of the senators of the committee. Can you hear me now? Okay. Johnson Nicholas GEDA. Good morning, Mr. Chair and members of the committee. So with the plans for refinancing, there's one that is scheduled that we have on deck right now for around December of 2026. Is for the limited obligation Section 30 bonds, the 2016 Series A. There's be the opportunity to refinance that around December of 2026. That'll be pending legislation, and of course, if any and all issuance is subject to market conditions and seeking attractive rates. With B, regarding new proposed financing, we have a few projects. One is Simon Sanchez High School, estimated around $166 million. The medical campus for estimated $500 million. The Department of Corrections new prison facility of $60 million. And three with the autonomous agencies, Guam Water Works, estimated $100 million. Guam Power Authority, estimated around $375 million. And the Port Authority of Guam, it's $100 million. And these are going to be in to FY 2027.
Thank you very much, sir. Yeah, I know that I believe legislation's already been introduced for the utilities, and maybe the port will be forthcoming, also subject to legislation. So nothing's really changed on the other proposals that are recognized in our appropriations, at least at a certain level. The only change really is the proposal. Go over that one more time, the December 2026. What refi presentation is that again?
That's the limited obligation Section 30.
Pull it a little closer to your mic. There you go.
The 2016 Series A limited obligation Section 30 bonds. That's was issued in 2016. The call will be 2026. Right now, we're looking at about $155 million. Current balance.
Has that been run through BBMR and the governor? Lester? Is it on the list? Okay, colleagues, refer to your list. Thank you very much. That concludes GEDA.
Thank you.
We'll reconcile the list. So now we're on the next segment of the agenda, update and outlook on Guam's tourism, GVB. Fiscal year 2026 tourism status update, fiscal year 2027 tourism outlook and estimated tourist arrivals. Ms. Regine Biscoli, you're recognized at this time.
Hafa-day, Mr. Chair, and hafa-day to the members of the committee. I did have a PowerPoint presentation that can help us to get through this section of the agenda, if we could pull that up. It's update and outlook on Guam tourism. Thank you. As you know, Mr. Chair, at GVB, our largest divisions focus on destination development. We partner with a number of GovGuam agencies, DPR, the airport, DPW, Port Authority, to help our shared goals where there's alignment. And then also marketing. So we promote Guam as a destination through advertising campaigns, digital marketing, trade partnerships, and destination branding in our key source markets. Next slide. In terms of destination development, we wanted to share a few updates with the committee. The Guam Micronesia Island Fair, one of our signature events, has been rescheduled due to Super Typhoon Sinlaku. It was supposed to be at the beginning of June. By law, this takes place at Governor Joseph Flores Memorial Beach Park in Ipao. This year's theme will be culture, cuisine, and seafaring. So that's slated for October of this year. Next slide. We also continue to put on the weekly Sunday Tumon Night Market. This was recently moved further south towards Tumon Sands Plaza. And Mr. Chair, it draws crowds from local military and the visitor community. And this is one of the many ways that GVB is increasing local participation in our industry. We have about 40 to 50 small businesses and vendors that attract about 25 to 3,500 residents, visitors, and military personnel each week, generating valuable economic opportunities for local businesses while enhancing the visitor experience in Tumon. So continue to look out for those events weekly. Next slide. In terms of destination maintenance, we spend a lot of our time really trying to restore from the typhoon, but also continue to beautify areas in Tumon and throughout the island where visitors are spending their time. And we have lots of points of interest data that help to support some of this work. These are some photos of our GVB maintenance team at work. We also have visitor safety officers, beach safety officers, and a concierge program to provide 24/7 service in language to our visitors. That's available at the Guam International Airport and at GPO. Next slide. Just a few quick updates in terms of marketing. Korea remains our largest market. And next slide. In March, we addressed our GVB membership regarding impending fuel surcharge increases that we were anticipating from airlines. So we worked with our source market teams to develop the Guam Fare Advantage program. The first period of the program runs from April through June 30th, and we've identified a number of goals for this program across our markets. And so here's some of the breakdowns for Korea. A few days ago, we concluded a successful Seoul International Travel Fair, along with 12 of our GVB members, pictured here, to promote Guam in our largest source markets. Again, Mr. Chair, we're actively engaging our partners and doing what we can to combat this fuel surcharge and some foreign exchange challenges in both Korea and Japan. Next slide. In terms of Japan, we are focusing on a variety of projects to stimulate traveler demand, increase brand awareness, and targeting audiences through culinary activations and focusing on sports tourism and educational tourism as outlined in these projects here. Next slide. Turning to the Philippines and Taiwan now, we also just concluded a successful Guam with Me event at the Glorieta Activity Center in Makati, Philippines over the weekend. And we currently, I think they leave today. We have a MICE fam tour out of Taiwan. They recently visited the Guahan Sustainable Culture at Hamamoto Gardens yesterday, and we're taking on a number of different tours and attractions across our island to really help to stimulate travel out of Taiwan. Next slide. In terms of the impact and outlook, I'd like to share visitor arrival numbers. We have some fiscal year-to-date numbers that I'd like to share. So from October 2025 through mid-May 26, our current market mix remains unchanged. So the lion's share of folks are visiting us 45% out of Korea, 35% out of Japan, and based on year-over-year arrivals, we're looking at a 10% increase from this period, the same period last year. And again, senators, just want to re-emphasize, these numbers are directly derived from the customs declaration form. So that QR code that you fill out when you return home to Guam, these reflect visitor arrivals. It does not include resident counts. So residents, when you fill out the survey on the QR code, we're able to separate those numbers out. And just wanted to emphasize that that's where we get our numbers. And we also enlist the help of a renowned third party, Tourism Economics. They are an Oxford company, and they help to analyze a number of our satellite accounts. Next slide. to provide us with this economic impact snapshot. So here are some highlights based off of the 2025 calendar year numbers. These numbers are up from calendar year 24, so from 1.1 billion up to 1.2 billion in direct visitor spending. That's in addition to 1.6 billion up from 1.4 in total economic impact. The total jobs supported were 14,400 in the year 24, and they're up to 15.1 thousand. And in terms of local Guam taxes, we're talking about corporate income taxes, withholding, and of course the hotel occupancy taxes. That is also up from about 150 million to 163 million in the year 2025. This 163 million in government revenues represents about 12% of our overall GovGuam budget. And so GDB really multiplies that local investment that you have given us. In the year 25 was about $22 million invested by the Guam legislature, and we've turned that around 7 times that amount in local Guam taxes. And again, these data sources include visitor arrivals data from GVB, the wage and employment data from Guam Department of Labor, price data from Bureau of Statistics and Plans, and a number of other sources to give us this tourism satellite account number and provide this economic impact. Next slide. We also wanted to present a chart on government revenues over time since 2021. And so in terms of the total tax revenues, you see, again, personal income tax, corporate, indirect business, social insurance, hotel occupancy tax over the years from 2021 to today. Gross receipts and special revenues, and just want to underscore the point that without tourism, Guam households would need to contribute an additional $3,700 every year in taxes. So I don't have $3,700 extra to spend or contribute in taxes, and I know a lion's share of our taxpayers and the working families of Guam don't either. It's very important that we support our tourism industry and help to continue to provide that benefit so we can fund our priority areas of health, education, and public safety. Next slide. In terms of the FY26 forecast, you can see that we've kind of been trending in the moderate zone for many of our arrivals. We had a nice uptick in December where we were hovering between moderate and optimistic, and then a downturn in April following Super Typhoon Sinlaku and some fuel surcharge issues. Also, many flights were canceled during that week of the typhoon. So we're really trying to lay the groundwork now to ensure that our peak season truly is peak. We thank the legislature for your support in giving us additional incentive funds so we can go out there and push. We also are looking at the months of July and August. A number of our airline partners that had suspended flights are looking to resume in those months. So we continue to keep the legislature updated about that and our community updated about that. Next slide. In terms of the FY27 forecast, this is based on available information to us as well as the cyclical nature of our tourism industry. It's subject to change, and we revisit these numbers every quarter. But in terms of the conservative scenario, we're looking at 774,964 arrivals, a moderate forecast of 934,000, and then an optimistic forecast, Mr. Chair, of 1.1 million visitors in fiscal year 27. Next slide. We also want to thank the Office of Public Accountability for its very thorough report. We recently released our 2025 financial audit, and we achieved a milestone, a clean audit for over 10 years. And this year, for the first time in 6 years, we had 0 audit findings. And so this level of fiscal management really underscores our commitment to transparency and accountability to the people of Guam. as well as our tourism stakeholders, and I want to commend our team for their diligence and expertise in supporting our dynamic work both locally and internationally. Next slide. Mr. Chair, with that, we thank you so much for the opportunity to provide this update, the outlook, and are available for any questions that you or your colleagues may have. Sizu Usmasi.
Okay, so the next item on the agenda is Guam's Economic Outlook 2027. And to that, we turn to, I believe, Mr. Hiles from Department of Labor.
Yes, this is Gary Hiles, Department of Labor, Chief Economist. And as a member of the Special Economic Service, I'll talk about federal military expenditures and military contracts. The economic outlook for fiscal year 2027 is a section in the executive branch budget which covers these items in considerable detail. The outlook prepared in January stated that the outlook focuses on identifying and quantifying the significant economic factors influencing revenues in preparation for the government of Guam's executive branch annual budget. So the summary is that Guam's economy is expected to continue expanding and recovering from the pandemic downturn throughout the fiscal years 2026 and 2027. Increased tourism, construction, and the number of DoD personnel are anticipated in 2026 and 2027, broadening the expansion to industries beyond construction. This economic expansion and partial economic recovery began in 2021 and 2022, restoring Guam's growth trend. Furthermore, increased economic activity is anticipated due to simultaneous increases in construction, including the progression of Camp Bloss Marine Corps-based construction activity towards its planned peak, missile defense construction, private and government construction projects, continued recovery in the tourism sector from Korea, Japan, and Taiwan. The anticipated expansion rate could range from moderate to more robust. It depends on how much and how quickly both tourism and construction expand simultaneously. There's considerable evidence that this assessment remains on track, but there's been a number of more recent data sets which support this assessment. There are also local, national, and international events which may affect this economic outlook. I'll note some of the major items since this economic outlook was published. First, more recent data on construction just became available, so I'll just thumb through some of the handouts on that. So the first one is a summary of the building permits. The Guam building permits for calendar year 2025 total just over 405 million, up considerably from the prior calendar year, which was 347 in the calendar year 2023, which the building permits for the civilian sector were 190 million. So the total for construction comes from two forces, the civilian sector and the military sector. The next page is Department of Defense contracts. So Department of Defense contracts went from a total in 2024 of 626 million, increased in 2025 to 956 million. So both the permits and the DoD contracts are legal obligations of in order to get a permit, you need a contract for the construction. So those are contracts that are very likely to proceed, and we'll see that construction going forward in both the military and the private sector. The next slide, it's large because it had to fit on the page, that shows the DoD contracts currently under construction or recently completed, and it shows the amount of the almost $6 billion in contracts that were in process, over $4 billion has been completed, but of the projects currently underway, there's over $1 billion in work still remaining. So in addition to the new construction projects, there's a lot of work ongoing. The NDA, National Defense Authorization Act for fiscal year 2027 was just passed by the House. It's not been signed by or become law yet, but this usually what's passed by the House ends up becoming close to the final product, and an additional over $1.3 billion is listed in the House projects. So that will be coming forward and should start construction in 2027 and 2028. Additionally, in addition to construction, the military personnel is expected to further increase. The active duty for the EIAMD population system is projected to go from 30 in 2025 to 246 in 26, and then in 2027 increase to 700. So all of these will increase revenue in a number of areas, gross receipts, Section 30, and income taxes. So a number of other events that have occurred is the war on Iran began in February 28, 2026. On this date, U.S. and Israel forces launched major coordinated military operation, codenamed Operation Epic Fury. The opening of airstrikes target Iranian military infrastructure, air defenses, nuclear sites, resulting in the death of Supreme Leader and dozens of other senior Iranian officials. The effect on Guam's economy is being felt largely in terms of higher fuel prices for residents and an adverse impact on visitor arrivals. Continuing recovery of tourist arrivals is a key component of the economic expansion. This was seen in part in the gross receipts figures for April, and it was hard to determine whether the impact was due to the war impact on tourism, or also in April we had the super typhoon Sinlaku, which caused considerable damage and a downturn in tourism arrival. So it appears that the downturn in GRT receipts was primarily due to the typhoon rather than the war, since the Japan and Korean arrivals to other destinations was less impacted. Also, the gross receipts collections resumed to a more normal level in the following month of May. And also some of it is just simply a payment issue, that the payments are being delayed because of the extension due to the typhoon. Some other factors that will support higher increases in a number of categories, income taxes, gross receipts, include wage increases. Comprehensive wage information published by the Bureau of Labor Statistics for all civilian occupations and industries document an increase from May 2024 of 44,480 mean annual wage to 46,210 in May 2025, a 3.9% increase. You'll probably see similar increases in the 2026 numbers when they come out next year. Also, the current prevailing wage rates for H2 workers and local workers in similar occupations were effective in June 11, 24, based on the 2024 OEWS Occupational Employment and Wage Statistics wage rates. The mean wage in construction and extraction occupations in May 2024 was $18.30. It increased to $19.35 in May 2025, a 5% increase over a 2-year period. This increased construction workers for construction workers will be effective upon renewal of their contracts. So that should start occurring later in 2026 and in 27. Increased wages and the increased number of employees in construction will result in higher income tax receipts as well as additional gross receipts as employees spend their earnings. Active duty military personnel on Guam increased from 6,989 in March 2025 to 7,386 in March 2026, over 5.8%. Future increases for the Enhanced Integrated Air and Missile Defense System include additional 700 active duty military personnel in 2027. Increased military personnel will support increased GRT as well as Section 30 funds. The U.S. Supreme Court ruled in February 2026 that President Trump does not have the authority to unilaterally impose sweeping tariffs under the International Emergency Powers Act, or IEPA. This potentially could reduce inflationary pressures and impediments to trade, impacting supply chains and tourism as well. Also, recently, U.S. District Judge Leo Sorokin struck down the president's $100,000 fee for employers seeking H-1B visas for highly skilled workers. Guam employers use these visas for professional engineers and medical personnel. So that will pave the way for employers obtaining the highly skilled engineers needed to design and implement some of these military and civilian projects going forward. The implementation of tariffs on goods imported into the United States does not apply directly to Guam, as Guam is outside U.S. Customs jurisdiction. However, will indirectly cause an increase in prices of goods as the cost of goods imported from the U.S. have good tariff costs imported. So the imposition of the tariffs created additional economic uncertainty and caused the Federal Reserve to delay reductions in interest rates. Foreign currency exchange rates are being affected if trade patterns change, causing the demand for dollars and other currencies to shift. To the extent that the tariffs reduce exports from Japan and Korea, that could dampen those economies, potentially reducing tourism. So with the elimination of some of these tariffs, that could reduce that potential impact. The primary risk for Guam's economy would be a deterioration of the Iran conflict and associated fuel and shipping constraints. The worst case would be that the fuel supplies would storage would fall further and impacting the availability to obtain fuel for the economies and jet fuel. So despite the global challenges with political, economic, and international relations, Guam economic outlook remains likely to remain positive in the aggregate.
Mr. House, Department of Labor. And so rounding out our categories identified in the agenda this morning, the last before open discussion will be federal military contributions expenditures. This will be presented by Bureau of Statistics and Plans, Department of Labor, BBMR, and Revenue Tax, and the status on military contracts and effects on GovGuam revenues. Mr. Santos?
Hello, I'm Matthew Santos. I'm the Deputy Director for the Bureau of Statistics and Plans, and I'll be presenting on federal and military contributions. To begin, I actually provided the electronic copy. I don't know if you want to present it or not. So.
We'll check AV right. Yeah, there it is. Okay.
Okay.
You may proceed, Matt.
If you want to go to the second slide, to begin, I'd like to go over the definition of what's being reported as amounts The amounts in this report contained include federal action obligations. So when funding awards, the U.S. government enters into a binding agreement called an obligation. The government promises to spend the money either immediately or in the future. So some of these do not reflect the actual cap or the federal outlays is what they call it, which are actual booked expenditures. Those are provided in the spreadsheet that are linked at the end of the document. Okay, next slide. So this slide represents the trend and amounts for federal obligations relating to federal assistance, and those are broken down into two categories, and those are grants and other. Others includes direct subsidies. That actually includes SNAP, but also other subsidies that are directly distributed to residents and not through the government. Direct payment with unrestricted use, retirement, pension, veterans benefits. This also includes Social Security payments, and then also insurance payments. And then other reimbursable, contingent, intangible, and direct financial assistance. These are also direct payments that don't go through the government. For 2026, although it's only June 9th, 2026, and a lot of awards for this year's grants have not been made, the reason that it's so high is due to the fact that 2026 includes the CDBG-DR, which amounts to around $475 million. So that's a huge share of the chunk of currently awarded for 2026. So this number will significantly increase by the end of the fiscal year. Go to the next slide. This next slide is exclusive to federal assistance to the government, and this is for the executive branch, legislative or judiciary, higher education, and then the semi and fully autonomous units. So right now we're about $1.1 billion already. Again, back to the CDBG-DR, and the majority of it is through the executive branch. You want to go to the next slide? Okay. Now we're on federal contracts. So my reporting is different than Mr. Hiles here, due to the fact that these include contracts that are less than $5 million and inclusive of all types of services. So whether it's food services to base operations support and all the micro contracts and purchase orders, these include the obligations for those. Then it's also broken down by contracts and direct spending from the individual federal agencies. So for 2025 and 2026, you'll see, or 2025, it's a huge amount, most of which have not been fully expended. So these include large projects like the glass breakwater, which is close to $600 million, which isn't projected to be completed until 2029. And then also other large multi-award contracts hovering around $500 million, which many of them are still in the planning stages. So these obligations represent a lot of money that won't be realized until the next couple of fiscal years. So for the non-Guam-based companies, just so you guys have a note, these include some of the large joint ventures to where there's a member on Guam, say like Black Construction, but they're joint ventures like incorporated out of California. And then you have some other ones that are large that are out of Hawaii. And I put a note down here that while right now we only see $580 million in obligations, the 2026 DOT construction appropriations was 1.2, and the committee passage of the 2027 NDAA is at 1.3. And then the last slide. No, 1 billion. Oh yeah, I should have put 3 more zeros. I'm sorry. Yeah. It should be in thousands. I'm sorry. Yeah, it should be in thousands. I should have put the extra zeros. My apologies. Yeah. Sorry about that.
It's also on this slide at the bottom.
Yeah. I should have put it in. My apologies. This is total obligated versus total outlaid. Outlaid actually represents the amount spent. So this one's a little bit more difficult, just the way that USA Spending does their reporting. They report the outlays, but they record it for the fiscal year that the award was made. So trying to trend actual dates of the expenditures is a little bit difficult through that type of reporting. They don't offer a cash transaction report. They only provide outlays versus obligations. So the remaining balances on those contracts should provide some insight of like money not realized in the economy due to outstanding, deliverables on those large contracts. And if you go to the last slide, and this again goes over what Dr. Heil or Gary Hiles presented previously, and then the last page actually includes links to the downloads for these things. So if you guys want to build a pivot report or look at the raw data, it's all available in the links on the last page. So you can see both outlays, you can see who's contracted for what project. So all that detail is line by line available in there. And these include things like change orders or approvals of requests for equitable adjustment. While they may seem small, like between like $500,000 to $2 million, there's a lot of them, so they do add up to a much higher amount than what's reported for the $5 million and over. So while those are like good projects to be able to monitor, these small purchase orders and a lot of these small business contracts, they do add up into the hundreds of millions of dollars over time. And
Excuse us, Monsi. Matt.
Thanks.
Appreciate you. So that concludes all of the reporting requirements for the SES from the various agencies and entities. So now we go to the question and answer portion from our colleagues. We'll start with Senator Gumatato. You may proceed at this time.
Yes, thank you so much, Mr. Chair. And I just wanted to start, if I could, and I appreciate BBMR sharing the documents relative to the Guam Educational Facilities Fund and real property taxes. I just wanted to ask a couple questions on that. Recognizing that the GEF anticipates a shortfall of $24 million in FY 2026, how much in real property taxes were paid last month? And based on the actual collections for both April and May, does BBMR anticipate adjusting the projected collection level for each of the remaining 4 months of FY 2026?
Yes, we do. As soon as the data is presented to us, you'll see what progress we've made in collections when we release the May report, June 20th.
All right, thank you so much for that, Les. Also, because GEF collections totaled only $1.5 million by the end of February 2026, according to the Special Revenue Fund Tracking Report for the period ending April 30, 2026, what portion of the $3 million in GEF-tied debts in FY 2026 had to be settled at the beginning of the current fiscal year, and were there any general fund transfers authorized to cover those payments?
There were no general fund transfers to cover any payments.
All right, thank you. Moving on to, and I had the question from the OPA relative to appropriations reserve. The appropriation reserve report as of March 31st, 2026 indicated $89,681,409 from the fiscal year budget was held in reserve, recognizing that GFD and GPD each reported substantial unexpended FY 2025 appropriations as of September 2025. So this is $7.9 million for GPD and $4.8 million for GFD. Is the Guam legislature over appropriating taxpayer dollars? And has the administration's decision to restrict agencies such as the Customs and Quarantine Agency and DOC from accessing unexpended FY 2025 funds in FY 2026, has it caused these entities to forego either critical recruitment efforts or capital expenditures?
There's no negative impact. For example, customs. The legislature has an ongoing section of the budget that allows special revenue funds to continue to be available. In this case here, the Customs and Quarantine Inspection Fund. So I informed Director Pareto that while you can't access your general fund lapse, you certainly have an accumulated amount in your special revenue fund. And there are certain agencies that have a better handle on their budgets than others. That revelation to him, because he was looking to try to get his lapses, I said, well, you can't use the general fund, but you have more lapses in your special fund. So, when we have these kind of discussions, it really opens up their ability to then pursue things that they otherwise might have thought they were restricted to pursuing. As a rule, sir, we do not ever deny anybody access when they require any release of reserves. So what it really does is, like, in the beginning of the fiscal year, you don't know that air conditioner unit is going to go out, and it's a relatively large expenditure. So it is not uncommon for us to get a request to release reserves and then fund it into capital needs for, like a 35, 45 ton AC replacement. We did something like that for DOC when they had the air condition at the Agana lockup go down, and then they had to take the detainees up to Manila. So it's these kind of unforeseen expenditures that the reserves allow for us to make money available to the agency. And again, I need to stress this, very clearly. Anybody who has a need for the reserves to be released, they're not questioned. We process those budget modifications on a timely basis and make sure that the agencies have access to the funds to be able to address unforeseen expenses. Sometimes they have to release reserves in other areas just to fund overtime, for example. Maybe overtime wasn't anticipated, or when it was budgeted in the beginning of the year, was under budgeted. So there are many applications of use of the reserves, but they're always going to be available.
All right, thank you. Moving on, the question for the Rainy Day Fund, or from the Rainy Day Fund, recognizing that Guam law provides that all unappropriated annual general fund revenues collected in excess of appropriations shall be used to liquidate obligations for refunds, earned income tax credits, and prior year vendor payables. What funding source was used to pay off DOC's $7,042,950.96 in prior year obligations, which were all for medical expenses as of DOC's budget request for FY 2026? And what is the plan to settle GPD's prior year obligations that's totaling $989,859.57, as well as GFD's $12,000 in prior year obligations for communication maintenance services as of the current fiscal year?
Maybe we need to reorder the certified budget document when it comes down here, because I think if I recall correctly, the prior year obligations is the very last page. So maybe we need to put that up in the front, because when the agencies come before the body, it's just human nature. You're talking about operational requirements for the upcoming fiscal year. And we need to not lose sight of the prior year obligations. This would be a good time, Senator Gumatauto, to take a look at, especially since the money is available, on legislative action that would provide the funding. Because when the funding was provided in the case of the police department, it was for the operations of FY26. And it was kind of like you could pay your prior year obligations if you have the money. And most people take a look at that as like a last resort kind of thing, and they don't necessarily address it because there are just numerous expenditures that come up. Some of them are unanticipated, and they call for the release of reserves, so that's covered. But if there was a recognition of a growing and unaddressed prior year obligation, maybe it's time, because these are private sector individuals who provide services, and their only recourse is to go file at government claims, and we only fund that to a nominal degree. So there's really no relief unless it's budgetary and recognized and provided to the agency.
Okay, thank you.
Could I add to that, please, Mr. Chairman? We at DOA encourage agencies to book their prior year obligations. Nothing is more difficult for us, especially for cash planning, if obligations suddenly appear and we have to pay them. So if agencies follow the rule and book them properly in the year they were incurred, they will form part of their budgetary appropriation for that year. And you won't have to deal with a rollover of an expenditure that basically we have to find the cash for. DOC knew about those medical bills. We encourage them. In fact, one of the reasons why they're running through is we encourage them to actually book, and then we were able to pay them as they book them. We certainly don't want any agency not to report an obligation to the financial system. It does no one any good.
No, I appreciate that, Mr. Byrne, and also Lester, because I know that in the pre-budget meetings, it seems like we're having to, it's like a changing of culture, right? I mean, if we already know that by the end of the fiscal year, they're kind of scrambling, maybe they should prepare at the end of the fiscal year to begin the fiscal year ready to go, and just as we've been trying to encourage them just to get everything done as opposed to maybe their old practice of waiting to the very end. Mr. Chair, I only have one more question on this, if I could. And I know that you mentioned at the very beginning, Lester, you won't be able to be at the next Friday's meeting. So if you'll allow me, if I could ask this question, the 2026 CRER April showed that there was $21.6 million available from the $25 million appropriation authorized through Public Law 38-124 for Typhoon Senlaku. If you can, again, on the rainy day fund, what portion of the $223,877 in expenditures and $3 million worth of encumbrances is from the general fund? And I know that you mentioned that we are going to be returning some portion back. Can you just, for the record, again, can you just explain that? Because I know you won't be here next week, and I know because you guys are on other government business off island. So if you could, can you explain that today?
Sure, sir. There's three funding sources, the 200... End the meeting. Hello? Okay. Anyways, there's three funding sources, and correct me if I'm wrong. $250,000 from the governor's executive order, There was $6 million from $7 million from what was left over from the SNAP, and then the remaining funds came from the rainy day fund. So we put in the rainy day fund, back to your reserves, 9.9 million in reserves. I don't believe we're going to touch that. And then anything else that's remaining, you'll see it in the report, because as I mentioned to you before the onset of this meeting, the activity Sinlaku related is really gone like almost to like no more. We're fully recovered. We're pretty much done. There are some encumbrances that probably should be liquidated because we're finished. So you'll still see stuff encumbered, but I'm very certain we're not going to have to touch the reserves. So at a very minimum, you'll get that almost $10 million.
All right, thank you so much for that, Lester. I appreciate that. And then, Mr. Chair, I only have just a couple more questions, but this is directed towards GVB relative to tourism dollars. So let me just start with probably my more important one. This is relative to the Tourist Attraction Fund. So the TAF owes the general fund $4.65 million as of September 30, 2024. This is based on audited financials that were published in September of last year by the OPA. This represents prior year advances from the general fund to sustain TAF operations. The OPA reported that GVB had a general fund liability of $11.4 million for FY 2023. So if you can for this morning, if you possibly can, what is the current balance of the Tourist Attraction Fund to general fund payable as of the most recent close, and what is the repayment schedule? I'm hoping I'm not missing something between the OPA report and the CRER.
Thank you. Test. Hafaday. Oh, there we go. Thank you, Senator. I'll actually ask our Chief Financial Officer, Rudgood Mullen, to join us for this conversation in terms of the TAF to give an update.
Good morning, Senator. Rudgood Mullen, Financial Controller for GVB. I understand your question, and I know where the data is coming from. But if I may, I would like to defer to DOA. They manage the TAF as well as the payables and the inter-fund exchanges between the two, between general fund and the TAF. So if I may, I'd like to defer that question to them, since they have oversight, and on a daily basis they can manage and see the cash balances between those two funds.
Okay, they're throwing it back to you, Mr. Byrne.
I suspected that was going to happen. I didn't actually catch all the numbers, Senator, but in general terms, the Tourist Attraction Fund, as you know, gets its revenues from hotel occupancy taxes, and that varies from month to month depending upon, obviously, the number of residents in the hotels. At the beginning of the year, we apportion the appropriated amount that needs to be paid to GVB over each month. And as we go down the year, we liquidate that obligation. And this year we have two obligations, the regular amount and the amount that was appropriated from the general fund for airline incentives. As we get through the year, if the Tourist Attraction Fund receipts end up with that fund being in deficit, and it's not the same number that you're necessarily looking at in the CRER, which is just the difference in the receipts, because if we don't make an expenditure, that's effectively a saving. We would have to stop making those payments when that fund no longer has any fund balance. What the auditors talked about was that due to timing and accruals, the fund balance went into a deficit number in fiscal 24, and Therefore, the general fund, which effectively is the fund that has to balance everything, the general fund was charged with that deficit. And their recommendation was we shouldn't be doing that. We should be sufficiently up to date with the expenses to make sure that the fund balance never doesn't go into deficit and you don't have to make that transfer.
All right, thank you, Mr. Byrne. My last question, Mr. Chair, is that, so as of April 30, 2026, the TAF is tracking to collect $31.2 million or $2.3 million less than the adopted level of $33.6 million for FY 2026. So based on the 2.5 million TAF collections during the first 7 months of the current fiscal year, how has GVB adjusted and aligned expenditures based on BBMR's anticipation of a $2.3 million shortfall?
I'll go ahead and answer that question, Senator. So we track the TAF performance on a monthly basis, and we meet with our management as well as the chairman of the board to look at our finances and essentially do a forecast of revenues versus expenditures. We do expect, hopefully it will be less, but at least a $2 million shortfall this year. Luckily, we've had maybe 1 or 2 contracts where we encumbered an amount, but because of the performance of the contract or the performance of the contractor, the cost of the actual contract is less. So that results in a cost saving. And what we'll do is we'll use that cost saving from that contract to be able to, augment the revenue shortfall, or the expected revenue shortfall.
But we're talking $2.3 million, so you're saying only one contract you're having to adjust?
1 or 2, depending on the magnitude. We still have 4 more months in the fiscal year. We'll have a better picture probably towards end of July, start of August, and the actual magnitude of the shortfall.
So, Ruud, which ones are we having to adjust? Do you know? Or can you tell us on the record which contracts are going to be, if you can, if possible?
One of them, Senator, is actually the incentive agreement that we have made with our partners in terms of direct service out of Taiwan. Okay. There was a large amount that was initially discussed and set aside for that, but because the load factors from Taiwan have been favorable, we haven't had to pay out as much. That's actually been paid by folks traveling over. So happy to report that and be able to move those cost savings in to cover.
That's one contract, so what's the other one? You said 2.
I think we'd have to wait till further along in the fiscal year to really determine where we are. But there are a number of other projects and potential cost-saving opportunities that we're going to explore in the next few months.
Okay, that's fine.
Thank you.
Thank you so much there, and thank you, Mr. Chair, for the time, and thank you all for being here today.
Senator Gumitato. Senator Taitigui, you recognized at this time.
Thank you, Mr. Chair. I'll try and keep this based on what the economic outlook is and try not to go into a budget, session here. So, but I just wanted to find out if the property taxes that are expected, the governor had mentioned earlier that she's going to extend this until December of 2026. Is that still true to form, or have you decided to move that date up for some reason? Because you're bleeding into next fiscal year when we are anticipating the funds to come into this year.
Yes, ma'am, that is still the deadline. However, what we've seen is the majority of the taxpayers prefer to make their respective payments ahead of that.
Oh, okay. We're showing a negative based on the CRER. So based on FY 2025 in May of the fiscal year for that year, and versus what we're seeing now in 2026, we're looking at a difference in the BPT, gross receipts tax, of about $16,276,000 difference from 2 years, from now until last year, right? So what are we attributing to that negative amount that we are today of $16 million? And we're not talking about the property tax. We're just strictly going into the gross receipts tax. So if you look at what was accumulated in May of this year of 253,793,431 versus last year in 2025, you're looking at we are less than 16,276,130 less. And what is that, like the anticipated downfall of the economic outlook we're expecting for FY27?
Yeah, just you might want to look at the April CRER, because my question on that as well is predicated on the fact that actually BPT is tracking up 10.2 million.
Yeah, I'm looking at the May that was just given to us, the ending of May.
Okay.
And then I compared it to the ending of May in FY25, and I'm showing a negative 16 million this year. And I was just wondering what that trail, is that something that the economic outlook is starting to see a downfall? Yeah, last year, 2025.
Cumulatively, we're still up, but if you're asking why the amount went down, the BPT did go from 5 last year to 4.5.
Yeah. Right. Yeah. Okay. So it was anticipated that because of the BPT, going down, is that what's anticipating another loss of another 16 million if we were to move into next year and lowering it another 0.5%? Are we looking at $16 million loss?
You're
or
looking
lower?
at more like 40 something.
40 million?
Yes.
But we'll get into that in a moment, because
Okay.
our analysis
But
doesn't show that.
That's
Actually,
not
our analysis
reflective.
shows 24 million over this, but I'll
Right.
get into that in a minute.
So that's not reflective of the economic outlook then that we are anticipating for the government of Guam or our economy. Those numbers are just reflecting on that change of the 4%. Going down to 4%.
I think the bottom line, Senator, is that the adopted level is being exceeded. So regardless of, and you can't necessarily compare
But that's
last
just
year.
being conservative, but I'm just talking about our outlook.
Our outlook is
is very
bright.
good. Okay.
Very bright.
That's good to hear.
Yes.
Okay. So it is just based on those numbers from the BPT lowering. Okay, just wanted to make sure that we're looking in that direction. Section 30 funding, when you talked about Section 30 money and how it's going to be increased from, I think it was 85 that was last year at 79, if I'm not mistaken. So there's a 5 million increase? Right, 5 million increase. Now, are you anticipating the comments that were made about the military buildup and how we receive Section 30 funding, and for the listening audience who are chiming in to try and figure out what the Section 30 money comes from, there was comments made that there's going to be a rotational basis for individuals being stationed on Guam, and it's going to go every 6 months. And when that happens, we are not anticipating any of their taxes in Section 30 money that we receive coming to the government of Guam. Have you taken that into consideration, or this hasn't begun yet as far as these individually stationed on Guam?
There's a couple of things to that, Senator. Last year, when we wrote to the Office of Insular Affairs with our request, we cited the continuing military population, including the fact that Camp Bloss had recently shown that the first wave of Marines from Okinawa were actually being stationed. So Tetra Tech did a report for the Office of Civilian Defense Liaison Office, and that's where Mr. Hiles has some of his information about the increase overall, particularly because we're only talking about the military buildup, and then this missile defense thing all of a sudden came around from out of nowhere, and that alone is contributing a significant amount of active duty military, and then also the civilian-related military contractors that we collect Section 30 from. So I'm very comfortable with the number and the continued number that we're going to be seeing over the next few years as the military ramps up. We used to use a sand chart that showed like the buildup, peaking at around 35,000. The Tetra Tech report now has us at, once we hit the steady state, it's 42,000. So the Tetra Tech report basically is increasing the population associated with the military buildup because it has active duty dependents, civilian military related, their dependents, and then it also has contractors, which you see in the beginning, but then it goes to zero at the full build out. And that makes sense. And they did all that in conjunction with Joint Region Marianas. So then the information they got was, quote unquote, from the horse's mouth. So I have no problem whatsoever with the numbers that we're providing. As a matter of fact, Mr. Byrne and I asked Treasury when we met with them in February, you haven't done a reconciliation of Section 30 for a while. And we've had the buildup. And we've been conservative in our Section 30 numbers. So we really encourage them to look at the Section 30, reconcile it, because we believe there's money sitting on the table. Yes.
Then it's anticipated. Okay, and for sure, my last question. The end of fiscal year 2025, September, it showed in the CRAR report a negative $7,278,278, Mr. Burns. So that was the end of the fiscal year for FY25, right? On the CRAR report, if you look at it, it was a negative. And that's a cumulative of the special funds and all the bills that were provided that year to take on any excess revenue, et cetera. So FY25. And now we're moving in the FY26 region of the financials. And I didn't see anywhere in there where the $7 million was accumulated as what you put as, obligations. So when we receive the CR report, at the bottom end it shows, public laws where we have appropriated from, et cetera. And then of course you're going into the special funds on the negative on special funds. And then you come down to the, what is the net. But that $7.2 million showing negative at the end of a fiscal year, I didn't see it travel over to the FY 2026. What happened to that? How are we going to pay that obligation?
Excuse me.
No worries.
Well, as I mentioned a little earlier, that's the difference between the expected revenues and the actual revenues. It's not necessarily the fund deficit. We're finalizing the numbers for fiscal 25 now, including these special funds. So we don't know yet, but we will, on the point of reporting, what these actual deficits are going to be.
Okay, thank you so much, and thank you everybody for your time.
Thank you, and also, I guess to start, because really, I got to say that I'm confident with the numbers you provided, and I think that we have a very similar analysis. I'm going to drill it down to the one area where it's always going to be the point of contention. Before I go to that, fund balance discussion, Mr. Byrne and Lester, when you give us this cumulative fund balance by fiscal year, are you rolling that over to the next fiscal year as the fund balance, or is that identified as an item within that fiscal year?
So, are you referring to the financial statements?
Correct.
Surplus deficit? No, the surplus or deficit for each financial year gets accumulated into the general fund balance.
So the general fund balance for fiscal year 2025 will be basically inclusive of or a new representation of what the fund balance was in 24.
It'll take the 24 balance, which I think was like 42 million for unassigned, and it'll be increased or decreased by the surplus or deficit for fiscal 25.
Okay, and so essentially that can also be a reconciliation of deficit, positive or negative, in terms of the overall position of the government.
Yes.
Okay. So the only real analysis I wanted to, and this goes back to the previous question, so this is the analysis that I have so far. Business privilege tax revenue for 2026 is tracking on the April CRER, reflects revenue tracking of 379,015,906 in BPT revenues, which is a 10.2 to 229.74 above adopted BPT revenues of 368,794,932. Unaudited BPT collections at the end of fiscal year 2025 BPT rate at 5% totaled 403,014,612, which represents a reduction of about 24 million from the FY 2025 at 5%. That's why I'm saying that's what my numbers are showing right now in terms of that. Previous estimates pegged reduction BPT when the rate was reduced from 5 to 4.5 at 40 million. Given this current information, does BBMR continue to believe the impact of BPT revenues, according to Guam law, for the 4.5 going to 4, our closer estimate is 24 million. Are you saying it's going to be more?
I would like to be able to say emphatically one way or the other, but honestly, I'm not prepared to have a response. However, I think both of us agree there's going to be a reduction. You're basically just saying the reduction is less than what it is that we believe it is. And to that point, right, if going back to what it is, obviously, Simon Sanchez, that's $16 million. DOC is $5 billion. I could, you and I could go on and on about stuff that we need to fund that we're forgoing the revenue to fund. And the one thing that I wanted the general public to understand is that we follow the IRS, and the corporate tax rate reduction from 2017 that brought us to raising the BPT was permanized at the lower level. So the corporate tax rate that really is the culprit, for lack of a better word, for us raising the BPT has actually settled into a position to where when you look at corporate tax revenues, they're very, very strong. And they're almost as strong as my withholding tax that I just love to be able to remind people that's people that are working and paying their fair share of taxes, or the employers are. I think even if you and I were to agree as gentlemen that it's not 42, it's 24, and we agreed that it was in the middle, we're still looking at funding the government of Guam on things what doesn't include cash for prior year obligations, doesn't include additional funding for village street paving that, thankfully we're able to subsidize with the ARP. When we get the schools back, I know we're going to all be looking at each other for school repair money for those 4 schools. I'm not going to, as you mentioned, sir, and you're absolutely correct, it's a policy decision. And this is a nice way to have a discussion where none of us are doing anything but just calmly and articulating where it is we're coming from. But if it's the will of the body, and if that's what happens, and the action comes before the governor for consideration, and we make a statement that, well, you didn't get this, you didn't get this, you didn't get this because you did this. I mean, it is what it is. We're not going to, it's going to be done. We're just going to have to live with it.
And I appreciate that because, I mean, certainly this is something that, you know, when we have exactly between the two branches of government, when we have policy discussions, policy differences, this is the way I like to have it. And of course, that when we go over next door, that is what it is too. Yep. You know, the thing is, I want to be able to take from here next door, particularly because this is a big policy change, and it'll be discussed. You know, the public will listen to the discussion, and we'll have a final product. You know, especially thank you once again, the potentiality of the 25 audit coming out soon. You know, that'll also give us a picture of what are our priorities and where are things and where the government also may be, you know, missing out on collections for some of these vital projects as well. So it's all on the table.
Sure.
I just want a couple of things I wanted to reiterate once again, though, is we have not incurred any expenditures against the 16.3 million appropriation currently in fiscal year 2026 for Simon Sanchez, correct?
Mm-hmm.
Okay. And we also we do not currently have a plan for DOC A&E that's ready, shovel ready, correct?
Working on it, but
Okay.
not yet.
Okay. You know, and those are some of the things, I mean, that we will take into consideration as well going forward into the fiscal year and find ways to you know, work with you on that also and set up the government, and I'll close with this. Actually, before that, I'll go to Mr. Guerrero to see if OFB has any questions, and I'll make a closing comment, and then we'll call it a day and go have some lunch.
Thank you, Mr. Chairman. Just have two questions. One for Mrs. Lazama. You know, you indicated a 59.9 million total amount for the child tax credit. Do you have can you break it down to include the additional child tax credit?
Sure, I don't have it right in front of me, but I can certainly get that to you.
That'd be fine. That would help. And the other one is that, do we know what the balance
Sorry,
is
could I
at
just
the rainy day?
intervene on that? It's all included in that number. It's
Yeah.
not like it's
Parceled out.
it's not like a separate number.
Okay. Because before prior to this year, we've had two separate numbers going back several years. So I'm just wondering why this year for 26 there was only one amount. So that's what I was just asking.
Last year also was the same
Yeah.
thing.
So it's just last year, this year, but prior to there was always two separate numbers that were provided.
Yeah,
So just curious as to why it was lump sum.
Mr. Zalman might have that. I certainly don't. Right?
Okay, that's fine. If it's lump sum, it's lump sum. If there's no breakdown, there's no breakdown. I'm good. At least I just got an answer. The other question is, do we know what the balance is of the rainy day fund
Yeah.
today?
The audited is the 936, or wait, sorry, 57, and then 25, we added 18, and then if we add this, then we're at 68 with the send-off.
So, we're putting it back, right? Or no, that's the appropriation.
No, this is the 26 appropriation. So it could be 78 if we put back 10.
Right now, we're showing 68,071,369. And as I mentioned earlier, if we redeposit 10, you could easily say that it'll be 78.
So if we go back and redeposit, give back the 10 million, we're back up to 78.
Yes, sir.
You know, every year that required number, you know, changes depending on estimated revenues that the government was going to collect. over the last 3 years. So do we anticipate that number going up or down for 27? Because, we are reflecting an amount in the EBR of about 6.8 million that we have to contribute to the, but if we're already at the cap or at the required amount for the rainy day fund, will that 6.8 million be required to be transferred into the rainy day fund?
Well, when we submitted the budget, that was before the typhoon, and we calculated the cap
Yes.
and the need only for 6.8 million to reach the cap. And then we appropriated money from the rainy day fund, which more than half of it I anticipate will be returned. We're going to be at like close to $80 million. There's a requirement to do something, but there's also it's not uncommon when we were in a deficit because we were doing deficit reduction. So ball's in your court. It's a policy call.
Okay, so I guess it's safe that since we're not in a deficit, and then I guess it's $78 million, if the balance is $78 million, that there would be no need to transfer anything into the rainy day fund in 27.
I know we have a statutory cap.
Yes.
I know you have to balance a budget. Is $80 million a good number? $80 million is a damn good number.
I believe in our preliminary numbers, it came out to almost 80 million is what we have to put in the rainy day fund. So, 2 million here and there, that will help to get to the cap. And of course, we want to make sure that we get to the cap because it's required by law that we do that every year.
Yeah.
Okay. And that was my only 2 questions.
Yeah, if you got there incrementally as opposed to like one shot.
Absolutely.
There you go. That's why we agree.
That's all, Mr. Chairman. Thank you.
Thank you, Director Guerrero. I want to thank you all for being here today. I think it's been a very positive and productive meeting. As I discussed with the policy call, I just have 2 comments. That will also probably adjust depending on the what the number comes in as per juxtaposed against the EBR. We'll have that very fruitful discussion when we convene and get started on adopting the revenues. And so we'll see what that final obligation and how we handle that as we go forward. I guess I just want to leave today that, to me, and I'm sure this is shared by the administration. I'm not saying this is a legislature or OFB or my personal position, but as I say that I'm encouraged by Department of Labor. I'm encouraged by, right now, the mother's milk of our economic driver here in the over $1 billion, and several of that still outstanding moving forward. Our continued push and hope that we get tourism to continue to track well. And our continued hope, too, that I like the fact that you talked about the numbers of withholding because of people working.
Yes.
And because of people getting wages that Gary reported on that are anticipated to continue to get better. And so, it's like a rising tide. I'm going to say that I'm going to hope for, even though, we'll see the will of the body. We maybe have some differences. But I think the thing we can agree on today as we go into July is that, if anything, good accounting, making sure we're accountable for the finances and the monies we're managing, timely processing, taxes, collecting taxes, different areas where we can also collectively work on to improve. You've made a very good case in terms of what your contractual obligations and things are for making sure Rev Tax has what it needs going forward as well. So I think, if we walk away from the table with still having differences but have a common goal, and that common goal is we're all in this together when it comes to driving that economic outlook and the economic outcome, I think we can split the difference and see where we are. We'll get through it as smoothly as possible, or as much turbulence as possible, but in the end, the plane will land and take off again. So we appreciate your participation today. I think we have enough for, of course, our committee now to start to compile our projections and everything else and get our bill worked on and ready for the floor. And also, any updates we'll appreciate. Of course, we'll have the official CRER on June 20. And what I'm going to ask you for when you come in, just so that we can really be close again, because this is going to be some of the back and forth, I believe, is I know you mentioned that you're available on the 7th to debate revenues. And that's okay, because I believe we'll go in on the 6th just to get in and officially put the bill down and be in committee of the whole. And I don't expect deliberations in earnest until the 7th. And that will be, of course, the discussion on revenues and all the presentations by OFB as well as BBMR. So what I'm going to ask you for is another back of the napkin, just because we've had that flux, right? So we now know that May is much, much stronger based on your presentation today. And we want to see if at least it's maintaining based on your calculations as you come in to discuss revenues. Or maybe, God willing, improving. But then that'll also help. As you said, this is a move from the tradition of the August deliberation on budgets to July. And so all the information possible will be helpful to make a productive decision by July 17th. Once again, thank you for being here. I got you right on time for lunch at 12 o'clock. The Committee on Finance and Government Operations and the Special Economic Service meeting for the contemplation of the 2007 Budget Adoption Budget Act is now adjourned. Jesus Masi.